Welcome back to the podcast. Today we're going to take a deep dive into one of the most talked about assets in crypto right now, Ripple's token, better known as XRP. This is a coin that survived court battles, years of doubt, and more volatility than most could stomach. It's carried a community that calls itself the XRP Army, and now it has crossed one of its biggest milestones yet, the launch of an exchange-traded fund. The question that everyone's asking is simple but important. With the ETF milestone finally here, can XRP truly break out into the kind of price discovery its holders have been waiting for, or will it run into the same walls that have capped it before? This isn't just about one asset. It's about what happens when regulation, institutions, technical setups, and community narratives all collide at the same time. The approval of an ETF changed the conversation overnight. For years, critics argued that Ripple's token was too risky, too unclear legally, and too marginal to ever find a home in mainstream financial products. Yet the ETF launch challenges all of that. It means regulators are satisfied enough, at least for now, to allow XRP to be packaged into a product that pension funds, hedge funds, and everyday investors can buy directly through their brokers without needing a wallet or exchange account. That is legitimacy on another level. But an ETF isn't a magic wand. If Bitcoin's experience taught us anything, it's that approval brings excitement, but not guaranteed rallies. Bitcoin saw billions in inflows, but also heavy profit-taking. Ripple's token will likely follow a similar trajectory. The ETF is the foundation, not the finish line. The market's first reaction was excitement. Volumes surged and the price pushed toward $3. But that number isn't just symbolic. It's a wall that XRP has hit before. Traders know it, and they act on it, creating profit-taking pressure whenever it nears that zone. The coin has since settled in the 270 to 285 range, testing support, but not collapsing. This is where analysts start watching the charts closely. Matthew Dixon, CEO of EVI and a longtime XRP watcher, points to a triangle pattern forming near 270 support. He believes that if Ripple's token can clear the $3 mark decisively, it could launch into what Elliott wave theorists call a fifth wave rally, the stage where momentum accelerates and often overshoots expectations. Others are less convinced, warning that without heavy inflows from the ETF itself, the coin could stay locked in its range. And right now, let's be honest, Bitcoin and Solana are getting more of the spotlight. Behind the scenes, though, whales are quietly building positions. On-chain data shows that more than 47 billion XRP are now held in large wallets. That's a staggering amount of supply concentrated among the biggest holders. It cuts both ways. On the bullish side, it signals confidence. Big players don't accumulate like that unless they believe in upside. On the bearish side, it means just a handful of wallets could sway price action with big moves. History leans toward the bullish interpretation. When whales accumulate during consolidation, the breakout that follows is often powerful. We saw it in Bitcoin back in 2020, and we've seen it more recently with Solana. If Ripple's token is repeating that pattern, this could be the quiet accumulation before the storm. Institutions are the other half of the equation. With the ETF wrapper, they now have a clean, compliant way to get exposure. Early reports suggest inflows are steady, but not spectacular. That's to be expected. Bitcoin is the digital gold that money managers can sell to their boards in a single sentence. Dogecoin's ETF has novelty value, riding retail enthusiasm. Ripple's token sits between those two extremes. It has real utility in payments and settlement, and a community that generates buzz. But it doesn't yet have universal recognition. What it does have, though, is regulatory clarity. The Ripple versus SEC case was brutal, but it ended with a partial victory that matters. Secondary sales of XRP were ruled not to be securities. That gives institutions something invaluable: legal cover. Combine that with the ETF wrapper, and for the first time in years, big money has both compliance and convenience. When you compare Ripple's token to other ETF coins, you see the contrast. Bitcoin dominates because it is the benchmark. Dogecoin is more of a cultural asset than an institutional one. XRP is something different. It has the payment use case, the passionate community, and now the regulatory clarity. It's positioned to capture flows from both sides, serious money and speculative money. That middle ground could prove to be its sweet spot. Technically speaking, the charts show a battleground. 270 is the floor. If that holds, bulls stay in control. If it breaks, the next real support is down near 250. On the upside, $3 is the first barrier. 320 is the second. And beyond that, $4 and $5 come into view. Some analysts even talk about long-term cup and handle patterns pointing toward the teens. That may sound outrageous, but crypto thrives on ambitious targets. In practice, it would require steady ETF demand, whales holding their ground, and a bullish wider market. Macro conditions will also play their part. The Fed's rate cut has created turbulence across risk assets. Stocks have wobbled, gold is steady, and crypto has swung in both directions. In that environment, assets with fresh narratives often capture the most attention, and Ripple's token with its ETF is exactly that. But headlines fade fast, and XRP's challenge is to turn short-term buzz into long-term conviction. So what are the scenarios? In the bullish case, support holds, resistance breaks, ETF inflows grow, and the coin marches toward $4 and then $5. In the bearish case, 270 fails, price drifts lower, inflows disappoint, and attention shifts elsewhere, maybe to Ethereum recovering or Solana's continued growth. Most realistically, we end up in the middle. Ripple's token grinds sideways between 270 and 320. The ETF provides a safety net. Whales provide support. But the real breakout waits for the next big macro push or another surge of retail enthusiasm. History reminds us to be patient. In 2017, XRP went from pennies to over $3 in weeks. In 2021, it lagged because of the SEC case. Now, for the first time, the legal cloud has lifted and an ETF is live. The conditions are new, but the pattern of lag then surge could repeat. The XRP Army hasn't gone anywhere. They've held through ridicule, delays, and uncertainty. Now, they have a new rallying point. Narrative matters in crypto, and when you combine narrative with liquidity, you get explosive results. Regulation is also shifting globally. The new UK-US task force adds momentum to the idea of aligned rules. If regulators in major economies work together, institutions will find fewer reasons to stay out. Ripple's token, already tested in court and now packaged for institutions, could be one of the safer plays in that environment. So can XRP finally break out? The pieces are there: whale accumulation, regulatory clarity, a passionate community, and the ETF wrapper. But nothing is guaranteed. Support has to hold. Resistance has to break. Inflows have to build. The ETF isn't the finish line, it's the start of a new chapter. Ripple's token is holding steady. Whales are buying, analysts are watching, and institutions are circling. Whether the breakout comes this month, this year, or next cycle remains the open question. That's today's deep dive. Drop your thoughts in the comments. Do you think XRP is ready to lead the next bull run, or will it stay stuck waiting for the next spark? Smash like if you're bullish, follow for the next update. And as always, protect your crypto with a ledger, link in the description, and we will see you at the top.